Welcome back to Morning Trade Live. I'm Nicole Petalides. It's time to go inside out on the used car market. It's up, it's down. The prices are up, it's down. How's demand? But I'll tell you, when you look at Carmax today, oh, that's down for sure. Karl Brauer, executive analyst, iccars.com. So that company reported its numbers and it's tumbling, an earnings miss. They did see used car sales growth. However, the stock is down about 15% this morning. How did you evaluate this report? Were there bright spots or all bad news?
I mean, I think if you look at the just sheer numbers, most of the numbers are pretty strong. There's a lot of year-over-year growth in various things like sales, and they did hit their revenue target, their overall revenue target. The real concern, of course, was the profit margin. They did miss EPS, and if you dig into it, it looks like there was expenses that they had to pay, and they're still investing in growth. And we want to see, not just growth overall, but growth per store. And those numbers did seem to go up. But I think there, as always, it's forward looking. And when you look at what's going on with used car prices and the uncertainty of where the demand and pricing is going to be going forward, if we have tariffs driving up the cost of new cars, that's going to drive people into the used car market and drive up the cost of used cars. But are we also in a situation potentially where consumers aren't going to have the funds to be buying more expensive used cars and sales are going to drop? And I think that's where the real uncertainty is that we just don't know if consumers can absorb any higher costs on used cars. And at IC Cars, we saw the pricing for used vehicles go up last month, just barely, but they hadn't gone up using our metrics since October of 2022. So this is the first time in 2.5 years that used car pricing slightly increased after being pretty flat the previous 6 months. So we could have pricing going up on used cars, which I don't think the market can absorb right now, the consumer market.
I wonder what the economy really will do in the next 90 days. For example, I spoke to a telecom owner and he said, I'm going to bring in as much as I can in the next 90 days ahead of the tariffs. I spoke to a friend who was looking at cars. I'm trying to get a car right now before the tariffs. I think people are going to start front loading. To your point, the tariffs could raise prices, right? And people may not be able to get new cars. They may get used cars, and they may not be able to afford used cars. They may get nothing. But the pricing issue may become an issue once again, not like COVID, but like COVID. How about the fact that the company, part of the spending was on compensation and advertising? Is that okay?
Yeah, I mean, it's clearly they've invested in people and in awareness, but it seems like it's not that investment isn't keeping up with growth in revenue, and we lost some profit there. And again, I think if we're looking at a forward thinking what's going to happen next, you said it exactly correctly. There's probably going to be a near term increase in new and used sales that could make the numbers in like Q1 look good and drive up the price like we saw. But where does that leave us for the rest of the year if we eventually hit higher thresholds for pricing and consumers aren't prepared to deal with that?
What's interesting is while we're concerned that maybe many of the companies won't give us any guidance, some may give us some tempered guidance. This company is like all gung-ho about their progress towards their long-term goals. And they're going to have 6 locations with growth, 4 standalone centers, blah, blah, blah. The only thing they're doing is removing the time frame. So they still see that they can make progress to their long-term goals. That sounds wonderful. Do you believe them?
Well, they are the biggest used car retailer. I mean, they are massive and they've got a lot of reach. And I think that the tricky part, of course, when you're that big is the incremental growth. And I think that's where maybe some of the market hasn't been as happy because they've seen pretty impressive growth from CarMax in previous years. But are we hitting a peak here? Are we plateauing and it's going to be harder for them to see that kind of growth going forward? Again, so much of it rides on tariffs and the economic consensus and consumer sentiment. And I don't think anyone knows where that's going in the next 6 months. If they claim they do, they're probably not being honest. I think there's a lot of potential whipsawing as we've seen with the market. I think we could see the same thing in consumer sentiment and the economy overall.
All right. right. Well, thank you for all of that, Karl Brauer, iccars.com. Thank you. And by the way, folks, in the CPI today, used cars, that was down 0.7%. New cars up 0.1%. Tom White is here, and he has an example trade on Carmax for us. How would you go about approaching this trade? It's down 15% today. I don't know if that hurts or helps some of your trading ideas here.
No, I mean, if you're bullish on this or maybe neutral on it, it gives you some opportunities to take advantage of the pullback that we're seeing today, Nicole. So I looked at a strategy that just a couple of weeks long, not too aggressive, neutral to bullish in stance, taking advantage of the pullback that we're seeing. But I went out and gave it some duration. I went out to the May monthly cycle, so 36 days to expiration, where I'm just going to look at selling a put vertical that's out of the money to the downside while still staying risk-defined, because it's still not immune to the macro environment that we're in, maybe consumer sentiment and confidence waning, that maybe there's more downside. So I want to stay risk-defined on it. Selling the May 65 put, that's out of the money to the downside, and then to make it risk-defined, buy the 60 strike put, so a short $5 wide neutral to bullish put vertical, collecting roughly about $1.25 on that. That's what you can make, $125 on it, but it takes your break even down to $63.75 to the downside, and that's about 6% below the current share price. So you need some more downside before you start getting hurt on this one. It gives you a better probability of success if you do want to take advantage of the pullback and you still believe that the stock can right the ship or maybe reverse and go higher.
And the OG, I hope it doesn't go lower than the down 15%. And it's not too far off the $65 annual low. So for the folks betting for the neutral to bullish or hoping for this timeline of an exciting progress going forward, I don't know. We'll have to see. But in the meantime, thank you for that one. But you're also taking a look at Carvana today, right?
Yeah, that stock's pulling back double digits also today, probably on the back of the market falling after the big spike yesterday and the fact that Carmax earnings weren't as great. The stock, hit some pretty lofty levels over the last couple of years when they thought this was going to be bankrupt. 2 years ago, the stock was below $5 a share. So it's had a spectacular run. But their margins are a lot bigger than Carmax. Does that start to compress here a little bit? They report earnings on the 7th of May, so I want to avoid that earnings event. So I looked at some really short-term positioning that's a little bit neutral to bearish, where I can take advantage of the higher implied volatility in Carvana and the overall market. So going out to the April 25th weekly cycle, so just about 15 days to expiration on this one, where I'm going to sell the 215 strike call and then against it because I want to stay risk-defined in case something bad happens or good happens and the stock moves 2 or 3 standard deviations. Buy the 225 strike call, so a short $10 wide neutral to bearish call vertical on this one, where I'm going to collect roughly about a $3.50 credit. That's what I can make on this trade. I got $650 in risk on this one, but it takes my break even all the way up to 250 or 218.50 to the upside. So that's about a 10% cushion above the current share price in Carvana. So while you're taking a bearish stance, you're still giving yourself a better probability of success. You profit in 3 out of 4 scenarios on this one. The stock goes lower, stays where it is, or goes higher. You just want it to remain below 218.50 over the next 2 weeks.
All right. Thank you for that, Tom. Appreciate it. A good look there at both Carmax and Carvana. And I really am always fascinated by the folks who have the nerve to just buy a car unseen. Just look at the website and say, yep, I'll take it. People were buying real estate like that during COVID when they were rushing to they didn't even see the place and they would buy it. And they did that with cars too. I always wanted to be that cool. I could just say, yeah, send the car over. Tom White, thank you.
Thanks.